Recently, there was a news published by Blusmart where they said that they have raised almost 100 crores. Recently, I came across a very young startup called Elephant. Hello everyone, welcome to today's video. Recently, I made a video about my experience of investing with a startup via asset leasing route. There were a lot of queries about it, what platforms do I use and how safe and risky this is. So in this video, I'll talk a little bit more about asset leasing, what startups use this method to raise funds, what are the advantages and disadvantages. So what is asset leasing? In simple words, it is a debt raised by startups from investors like you and me. Investors purchase assets like electric vehicles, taxis, EV batteries, vending machines, and so on. The company operates these assets and generates revenue, business, and repays the investors on a monthly level. The IRRs in this arrangement usually vary from 15 to 25%, and the tenure usually varies from 1 to 10 years, depending on what the business is and what is the usual life of these assets. This is also very similar to the traditional businesses where retail business like Pantaloons or Subway would want to open a new store in your city, and they would, look for franchisees who can invest in the entire shop or outlet. Earlier, the overall investment was made by usually a single party or a couple of parties. With the betterment of technologies and fintechs coming up, the investment quantum has gone down. So investors like us can even start from as low as 50,000, and startups can pool in the money and they can buy assets and essentially start operating them. Now, why are more and more startups preferring this method of raising capital? So as far as my understanding goes, I think that this capital is perhaps the cheapest capital available in the market for startups. It is cheaper than bank debts, it is much more cheaper than equity or venture debt capital, and hence this allows startups to grow faster in their early stages. They are able to bypass the early stage, seed stage or angel round funds, save on their equity, reach revenues like 10 to 50 CR annually, and raise more meaningful Series A kind of round. Also, this method gives them all the benefits of angel round. So startups prefer angel rounds because it opens up a lot of network from them. In this case, they don't have to give up on the equity, but still people, investors like us, they start talking about these startups where they have invested, and a soft word of mouth starts spreading. In fact, because the repayments are on a monthly basis in this case, the investors tend to talk a bit more about these as compared to the equity investing, where they essentially have to forget the investment for 3 to 4 years once the investment is done. Now, why do investors prefer this kind of investment? So I can talk about myself. The first reason is higher IRRs. These kind of investments give you assured 25%, 26% IRRs, which I think are great for startups, considering even top tier venture capital funds target 30-35% IRRs on a yearly basis. The second point is startup investments are extremely risky. So in this case, because the repayments start from the next month itself, and I think even if a startup has to fail, it takes at least 6 to 12 months to go into the area where it is not able to repay your money. So as an investor, I have at least some kind of surety that I'll get some amount of investments back. In case of angel investments, it is almost 0 or 10x. Either your complete money wipes out, as far as I have seen for retail investors like us, or it is straight a bumper jackpot that you get. The third reason why I like these kind of investment is that I like having a monthly income sort of component of my investments, so that I can spend this money on things I enjoy. Some of the disadvantages of asset leasing that I can think of are: number one, the amount your investment does not compound like a normal investment in stock. So even though the IRR is 25% or 26%, your annual CAGR is somewhere around 11 to 12%. So don't expect your principal to get 3x in 5 years. It does not happen. Second, the monthly repayments, if you don't have a clear-cut plan or agenda for them, can become a headache, and you would end up not making a lot of money and having a lot of cash sitting in your bank account. And the third disadvantage is that it is a startup investment. It is extremely risky. I think that startup investments are very exciting, and with proper due diligence they can be rewarding as well, but it is perhaps one of the riskiest investment that you can make with your money. Now, some of the startups that I know of, or the platforms that offer asset leasing opportunities for retail investors, There is Blusmart, where you can invest in taxis. I have invested in Blusmart, but I have not invested directly. I have invested in them via a third party, that is Grip Invest. Recently, there was a news published by Blusmart where they said that they have raised almost 100 crores via their asset leasing program called XIRR. Another startup is Dalchini, about which I spoke in my previous video. Now, I'm not sure of the numbers, but if I had to estimate, I'd say that they have raised somewhere around 40-45 CR via this channel. Again, that's a big amount. And there you invest in vending machines. In my previous video, I said that I am considering another round of investment with Dalchini. By this video, I have already completed the second round. Another company that I know of is Race Energy. There you invest in EV batteries. They have raised somewhere around 8 crores and I plan to invest with them also. It's just not like I'm unable to find the right time to do that. Then there's a company called Machaxi. They have a very interesting model. They make and operate sports facilities for badminton, pickleball, swimming pools, etc. There you invest in these facilities itself. So these are very big projects, 4 to 5 CR, and the tenures are also on the longer side. They are from 8 to 10 years. Then there's another startup called Celsius that I know. There you invest in refrigerated trucks. Now there's a long list of these startups. I'll share the link in my description. You can check these out on my blog also. There's another model where it is franchisee owned and franchisee operated, and a lot of startups are offering those opportunities to investors as well. For example, Dalchini itself offers FOCO and FOFO model both, and I have not invested in FOFO model. If you have the bandwidth to run operations, then the returns there are almost double as compared to that of asset leasing. But then again, there are higher expenses of running the operations and taking that headache. So I have not opted in that. I have not invested in that. Recently, I came across a very young startup called Elephant. So they offer toys on a library kind of model. Just like in library, you can take and return books, and it is available for everybody on very cost-effective basis. Similarly, they offer and operate libraries of toys, high quality premium toys for kids, because the kids tend to get bored of toys very easily. So this is their primary offering, and they offer these librarian models to women entrepreneurs who can run this from their homes. Essentially, you invest some basic amount, and if you live in a densely populated area where there are a lot of kids, you can end up getting like a decent earning on a monthly basis from this. Now, it is very important to understand that I am not promoting any of these companies or this method of investing. The purpose of this video is to share my experience, whatever it has been, and some new ideas that come across in the markets, which I find very interesting. Finally, it's your money and you invest with your own sanity, your own due diligence, talk to financial professionals and be wise about it. If you have any questions about this video or any questions from my investment journey, please feel free to ask. I'll be very happy to share. If you think that this video was helpful, please like, share, subscribe, and have a great day. Thank you.